Okay, this is Alam Jaya question in the practice kit page 32. This is the first and second part of the question, whereby it asks about the issuance of ordinary and preference shares. So if you look at this question, template, I have already prepared this is the breakdown as at the early of the year or end of last year, which has the number of shares and the amount. Please take note that how much is the number of shares and the RM, which indicates the shares. This includes reserves of retained profit 120 million. Now, the first part of the question of Alam Jaya is about company issued 80 million units of ordinary shares at 3 ringgit each. Now, in this template, I have indicate a space here for the previous year balance of number of shares and RM. This is meant for the preparation of soft P should the question require you to prepare the soft P at the end of the year. Now, by looking at the question that I've read to you just now, the total number of shares issued is 80 million of 3 ringgit each, and 100 million of number of shares received. It means that it is an overwhelming response from the shareholders, whereby it exceeded by 20 millions, although the company only offers up to 80 million. So it means that for a start, the company received 100,000 units of ordinary shares of 3 ringgit each, totaling to 300 million, and this will be debited to our bank. This is bank, and credited to our ordinary shares application. And the board of directors decided to refund, to give back the 20 million number of shares to the unsuccessful shareholders, and this would be the double entry that you have to pass through, which is you have to credit the bank of 60 million, give back the money to the shareholders, and debit to ordinary shares application, and leave with the shares which is we accepted, which is 240 million. This is the one here lah, 240 million. Okay, and these 240 million will subsequently be transferred to ordinary shares capital, and by adding up to the previous year's balance of 100,000, it would be total up to 340 million. Okay, please note the number of shares is 50 plus 80, yes, million. Okay, now with this template you can see clearly how does it goes. Okay, for the next question, should there be any under or especially for oversubscribe, you can use this template. Okay, same goes to the balance in the bank. Sometimes you could make mistake by using that plus and minus sign. So these are the journal entries which I've explained to you earlier. Now, for the preference shares, for point number 2, additional information number 2, the company issues 25 million shares, which actually initially 25 million, and it were undersubscribed by 5 million. It means that the company only received 20 million shares. So because this is there's no buyer, there's no person wants to buy these shares, so it means that your shares is the company share only being bought by the shareholders at 20 million. So the price at 80 cent would be 16 million. Now the number the double entry would be you receive money 60 million debit bank and credit the preference shares application, and because this is the only one that it is being taken by the shareholders, and subsequently the 60 million will be transferred to preference shares capital account. Add up to the 30 million previous year's balance will end up to be 46 million. So these are the double entry, the journal entry which is required in the questions. Okay, for the bonus issue, the third part, this would be for the bonus issue. Alright, a bonus issue of 1 to 5 shares were made to existing shareholders. So talking about the existing shareholders is the shareholders which is the total number of shareholders existing previously. If you look at here at issuance, it is this one, the 50 million, not including the new one, 80 million. Of course, bonus is entitled to the old shareholders, not the new shareholders. You have to wait for some time for you to get bonus, okay? Alright, now, so for every 5 shareholders of shares will get 1 bonus issue. So if it is 50 million, we'll get 1 over 5 times 50 million, which make up to 10 million, and the price is indicated as 2 ringgit each, and the total RM you will get 20 million. Now, for bonus issue, it is the privilege that the company gives to the shareholders, like a bonus, perks, like a profit, a benefit, something like that, right? So the bonus is taken from the retained profit. So the retained profit is the reserves by the company. They have accumulated profit there from the first year of operation, and it will be taken out from the retained profit of 20 million, and it will be debited to bonus issues account, and subsequently bonus issues account will be debited and credited to ordinary shares capital. So the company's share capital has increased by 20 million and up to be 120 million. Okay, so these are the double entry. Mind you that 0 here should be the ordinary share capital. Okay, now the last part of this alam jaya is on the debenture, the issuance of debenture. Now it says that the date here is 1st August 2007. The company issued 2 million of 10% debenture, a discount by 5%, and commission cost of 70,000. Effective rate is 12%, and debenture interest is paid. The one that interest paid is 10%, which is the one that is being fixed in the debenture, 10%. Now, if you look here, the nominal value of 2 million less out with discount and transaction cost. So these are the amount that the debenture issued to the debenture holder, and the debenture holder pay to the company. Now, the double entry is debit bank and credit debentures. Okay, now the date of issuance is 1st August. It means that the interest charge would be from 1st August until the end of the year, which is 31st December 2007, which make up to 5 months, and the debenture holder charge interest at rate of 12%, and from this amount which is being issued to the debenture holder times 12% times 5 over 12, and then you get 91,500. This is the finance cost, debit finance cost, and credit to debenture. And the interest paid by the company would be on the nominal value times 10% of the percentage of the debenture, and will be accordingly to the 5 months, which make up to 83,333, and this will be credited to the bank, which is these are the interest paid by the company, and debited to the debenture. And from here you can see the movement of the accounts, whereby your bank has reduced to 1.7 million, your finance cost will be transferred to Sopel, and your debenture is a new figure of 1838. So these are the journal entries. Okay, this question does not require you to do soft P at the end of the year, but should the question ask you to do soft P, you must be able to know which figures to get, to get the figures from which part of the account. Yeah. And also for debenture, it is not so a problem because all in RM, but for issuance of shares, we have to be careful of the number of shares and the RM. Okay guys, so that's about it. Alam Jaya, thank you very much. Assalamualaikum.